Hi friends, welcome to A to Z Learning channel. Today we are starting our new series which is part of basic education series, and the topic that we are picking up is options trading. So we'll start right from the first question that people have when they are thinking about trading in option, and the question is, how do you identify stocks that are good for option trading? So in this video, we will help you understand in a very simple and easy to understand manner, how do you go about identifying stocks that are good for option trading. So without any further delay, let's commence our video. So first of all, my assumption here is that you are someone who is a beginner, who's still getting his or her head around the concept of option trading. So I'm presuming you are a beginner. If you're a beginner, then I would suggest that always learn about option trading by sticking to large cap stocks, big company stocks, which have got high liquidity so that you can trade, buy or sell in those stocks more easily. When you look at these large cap companies, you're basically looking at companies which have got at least a market capitalization of 70,000, 75,000 crore. You need to be very, very careful when you first enter into the market. I would also say that apply the 3-point criteria in terms of identifying the stock that you're thinking of um, using for option trading. First of all, always look for companies which have got clean management. How do you decide? How do you determine whether companies have got clean management or not? There are a couple of checks you can do. For example, always look for the company that you are considering on their website, look at their last couple of years annual report, and look at the section of who are their independent directors. If the independent directors seem to be the family members, if independent directors seem to be the people who are only director in that company and they don't have any broader portfolio of directorship in other companies, then that's a red flag. That's a red flag that the company is kind of supervised and overseen by people who are in the know, who are sort of influenced by people who are making the day-to-day decision in that company. So always look for companies with clean management, so that board composition will help you give you a feel in terms of whether there could be governance compromises and all that. The second point you need to kind of look at is basically look at the companies when you're first starting, the companies which have got great um, product and services suite. They've got market leading products. For example, if I pick up say Nestle as an example, Nestle, that milk powder, the baby milk powder, they are the dominating player in that product. There is absolutely no competition for them. Similarly, their product called Maggie is a market leading product, and they kind of, these two products pretty much hold about 90-95% of the total market. So these are the sort of, kind of, I'm not at all suggesting that Nestle, but I'm just using Nestle as an example that if you look for companies which are dominating in the space in which they are operating, then you have a great chance that you're picking up a company which will see through the period, and it will be a good investment for you. And then always look at the companies which have got a decent track record in terms of return to shareholder, decent track record in terms of overall performance. You should stay away from the companies which are relatively speaking new. For example, if there is a new IPO comes and a year later or 2 years later that company is already in the options trading bucket, I would urge you at the start, please stay away from that, because those companies don't have a huge amount of detail for you to be comfortable whether those companies are good investment or not. I know option trading is a short-term investment, But if your call, if your position is not gone right, you could be stuck with some of those stocks for long periods. That's why it's very important to kind of stick with the companies that have got a good legacy of performance. Of course, as you build more experience, get more confidence, you can be more aggressive, more riskier in terms of picking up the stock. But to start with, I would urge that look at these three criteria as you pick up the companies. Once you have decided your long list of companies, say, okay, there are about 10, 15 companies that you've identified which tick this criteria or the criteria that you have set for yourself, then the question comes is that apply few checks. First check, you need to always keep in mind that what is the scenario in the market? Is scenario in the market very, very bullish? Means stock price, stock markets are going up and up, or it's bearish where market is losing values every day for whatever reason, or it is pretty much range bound where one day it goes up 1 or 2%, other day it comes down 1 or 2% and stays within the same sort of range. So that's an important check to establish, because that will give you the appetite in terms of how far you want to be kind of going with your option trading, because bullish market will have scenarios for you where you would fundamentally assume that in a bullish market stock prices will continue to go up. So if stock prices are continue to go up, then you don't want to be in a place where you're buying put options, for example. Similarly, bearish scenario, you may not want to be selling put in that particular market. So you need to kind of keep those sort of market scenarios in mind as you make the decision of option trading. Second check, whichever company you have identified, make sure that you first of all check where is the stock price, where is the current stock price relative to 52-week high or 52-week low, depending on whether you're thinking of buying or selling put or buying or selling call options. You need to kind of make sure that the price is right value for you to be trading in the option. So that's very, very important, and that you can determine when you know over a 1 year period whether stock is at its peak or at its bottom or somewhere in the middle. That is an important check for you to kind of do. Third check is that make sure that there is no news around. Good, bad news. Stock market never behaves in a symmetric way. So you may be thinking that it's a good news. You may be thinking it's a good news, but it may still not be a good news, or company or market may still kind of punish the stock and the stock price, because there's no kind of logic that prevails here. So sometimes some of these news, when by the time they become public, they're already factored in, so big investors start to take money out and all that stuff. So if there is a news around any particular stock, I personally would avoid those stocks, because it's very hard to predict whether stock price movement will be in line with the news that you know about, or it will be contrary to the news that you know about. So it's very hard, because it could generate into short-term volatility if there is a news around it, and that short-term volatility could go in the opposite direction of your position, and therefore for option trading, make sure that you avoid the stock which have got some sort of news going on. Fourth check, then basically you need to apply few technical indicators to see where the stock price is. I normally use Bollinger Band, RSI, stock RSI, sort of, but you could have your own indicators. Idea there is basically to determine whether stock price, the current price, is at its peak, in the middle, or has been corrected, consolidated. Those sort of things you kind of these technical indicators help you determine. So it will give you an idea in terms of the position that you're thinking of taking through option trading, whether the stock is at the right level for you to be taking that position or not. And then the final check is always about the price and the premium, because the premium that you are paying if you are one of the buyer of a option, or if you are a seller, the premium that you are earning, make sure that the amount, the risk that you are taking by taking that position, the premium is a reflective of that. So for example, if you're a writer of an option, then make sure that the margin money that will be held and the contract value of the option position that you're thinking of taking, the premium is a decent return on that investment that you could be holding. So that's very important. If you're a buyer, then you need to make sure that the premium that you're paying is sufficient, and it will be in line with the sort of upside that you are hoping you will get in next few weeks or so. So price and the premium becomes the ultimate check that you need to apply before you take any position. So I hope this basic education on the option trading, where the how to identify stock for trading in options, has been helpful. We would look forward to your feedback. If you are interested in more detailed video on these sort of topics, let us know through your comments. If you have any suggestion, then also please let us know what you felt was missing in this particular video. And if you think we are doing a good job by doing these sort of videos, which are short, sweet, to the point, then please press the like button and let us know, because that is the motivation we need for us to kind of keep going. And last but not least, if you have not subscribed our channel A to Z Learning as yet, please subscribe and become part of our viewers family. Thank you so much for watching our video, and good luck with your investment.